right, well, stocks are up and oil is down. It really has been quite a market, kind of the peace trade, as investors seem to be betting on a path to peace in the Middle East. Doug Flynn, Zito Capital Management, here to explain all of this to us. How would you explain it? The fact that the market keeps rallying and the Nasdaq's going to be up by the end of, in 6 minutes when it closes, 10 sessions in a row.
Yeah. Yeah, I don't know if it's so much celebrating the peace. It's definitely celebrating a lower level of chaos, if you will. And the backdrop today is really a couple. It's a relief trade on all of that news, but it's also sort of unwinding a lot of the negativity that there's been in the market. We also got some pretty good inflation numbers there, and so I think the outlook on all of that, it just lowers the inflation and recession risk. And so, there we get a little bit of a push, and we're within 1% on the S&P 500 of the all-time high. So no one, I think, would have predicted that at this point with all that's still going on.
So this guy, Mike Wilson, who's the chief investment officer at Morgan Stanley, this is how, his explanation, and brings up a few other items. So I want to see what you make of this and what you would take away. Here's what he said.
The earnings story is much better, right? So we're in a much more resilient position today to weather something like this than we were a year ago. And let's not forget the tax cuts for the average consumers around, tax refunds are up 10 to 15% this year. So there's a lot of cushion in the U.S. economy right now to weather that. Outside the U.S., I think that is a bigger concern still. I'm more surprised at the rally we've seen in other parts of the global equity market as opposed to the U.S. I mean, the U.S. is really the safe haven in this case.
You agree with that point, the U.S. being the safe haven? I know we have the $4.12 gas that we have on the screen right now, but he says these tax refunds offset part of that.
They definitely do offset some of that, but I think, look, this market's still going to go a little bit according to oil. So if things are moving in the right direction and continue, that oil price will drop and that will go away, and then that extra money will be more meaningful. But this could, change around tomorrow, as we know, and the market will sell off on that news if it looks like this is going to be not as smooth a transition as we thought. But the market is looking past all that and seeing some great earnings come out today as well, which is sort of a forward-looking indicator. And so I think it's looking a little bit past the near term, which says again right now, perhaps this is not going to be a long-term thing, which gets back to that. But that news changes minute by minute, as you know.
Yes, it does. Just one more, and this might be a weird question to ask about this, and then I want to do your tax tips, Tax Tip Tuesday, of course. The other question is, do you ever get worried when the market doesn't pull back a little? Healthy markets are supposed to kind of correct themselves from time to time. I think a lot of people thought this would be the excuse, the war starting up, the uncertainty where that would happen. Does it ever, I know, you want higher stock prices probably, generally speaking, but do you ever get worried that the market doesn't pull back a little bit? Is that unhealthy?
It is unhealthy. We do get worried. In fact, the market was at some valuation levels, meaning prices relative to earnings that were higher than they've ever been. And so, you have to expect a 10% correction. On average, that happens once per year, just about every single year. And so, hey, we just got there. And the problem is, if you wait for things to get better like they are now, we've almost recovered all of that, you miss those opportunities. So look, in the short run, if you're contributing, you actually want the market to be off a little bit so you can add. It's only later on that you want it to be up higher where it's not doing that. But by then you should be a little bit more conservative. So if you're adding, you use those opportunities that come up, those 5, 10, 15, and even 20% corrections like we had a year ago, to layer in and add in. But we do get worried when it's too high for too long without something backing that up.
Yeah, so that's just something to keep in mind. Well, we'll see. We could still have one of those pullbacks. We just haven't really had it, even with the war. Okay, Tax Tip Tuesday. We're coming up on April 15th, of course, but your point is that that date, it's not the end of things.
Yeah, there are some things that you can definitely do right now, and you should do. What you can still do is, if you're eligible for a Roth IRA contribution, you can still do that for prior year, and whether that's a Roth or a traditional would give you a tax deduction if you're eligible for that. And you can also do a health savings account if you have one of those deduction for last year. And the caveat there is that you just have to be really careful to let them know it is for the prior year. When you send contributions in now, the systems are going to default to current year. You have to say this is a prior year. If you're self-employed, you have that SEP contribution you can do for prior year. You can actually do that up until October if you file an extension, which is another thing you could do. You could file an extension if you're not ready to file. But the caveat with that is that doesn't give you an extension of time to pay. It's just an extension of time to file.
Right.
And some people need that. They want to get it right. So
But
those
there's
are
nothing
things
wrong
you
with
can
doing
still
that,
do.
is there? I saw that you know an extension could be a quote-unquote smart move at times for certain people, like because some people have it in their heads, oh, I don't want to do that. I feel like I'm cheating the system, or I'm not, I don't know, I got to get it in on time. Are there situations where extensions make a lot of sense?
Yeah, anytime you might not have all of the tax forms, you're waiting on something, rather than file and then have to refile an amended return, it's better just file an extension. It used to be a whole big thing. You used to have to ask for permission.
Right.
Now it's an automatic thing if you just file. But then after this date, and that's why it's not just April 15th, you have to think about what can I do before now and the end of the year. Now, it doesn't help me for last year, but we don't want to let between now and December 31st get away from us.
Right.
And so you want to, those are the charitable deductions, the tax loss harvesting, and your 401k contributions. Get in as much as you can. You can only do that in the tax year between now and December 31st.
And we got all of that in before the 15th, just barely. Thank you, Doug. Doug Flynn, 4 p.m. Eastern Time.